Good day. My name is Simon Cat from the Arlington Group and Cat Calls. I want to firstly thank our co-sponsors, Oregon Group and miningnetwork.co.uk. Today we're hosting a silver solar-powered $100 webinar. Why is that? Because solar is 25% of demand for silver, 200 odd million ounces out of 800 primary supply each year. What we've done is assemble the best solar analysts and technology forecasters in the world for you. I'd firstly like to introduce Jenny Chase. She's been known as the queen of solar at Bloomberg for 20 years now, and nobody knows more about new technology and solar trends than Jenny. Jenny, over to you. Thank you.
Last year, about 444 gigawatts of solar modules were installed worldwide, which was about a 76% rise from 2022. And this year will be less of a growth. It's about a 30% growth in new module installations, but that's still fairly significant. After that, after 2024, there's a kind of who knows situation going on. On one hand, there are a lot of markets growing very fast. On the other hand, the growth of new build solar in China is probably slowing down just because China is building an awful lot of solar and it's starting to hit negative feedback mechanisms, like it is difficult to add new solar rooftops to the grid in many provinces. Or while the country has a big program to add solar on deserts and wastelands, that is probably not going to expand massively in terms of new build year on year. So we think that actually growth of new build in the solar industry is going to slow down from its frankly crazy chaotic levels at which it's been growing for the last few years. But there's huge uncertainty about this. Solar panels are now unbelievably cheap. You can buy a solar module in normal markets for the price of 10 cups of coffee. Solar modules are so cheap that we're using them as fences sometimes, and they are a similar price to using wooden panels for fences. It is really incredible how cheap solar modules are these days. But the other reason why the solar use of silver is increasing is a technology shift. Solar manufacturing is a viciously competitive industry, and it keeps moving to better and better technologies. So the average efficiency of a solar module has increased from between 15 and 16% in 2012 to about 21% last year, and probably a little bit higher this year. Most of this means that materials use per unit of solar has gone down, but there is actually a counter trend going on in the last 2 years. So technology-wise, in 2023, the majority of the market was what we call PERC solar modules. It stands for passivated emitter rear contact, but you don't actually need to know what that stands for. PERC technology modules are moving to TOPCon modules, which have a slightly different recipe, better efficiency, but they use more silver. So your average PERC solar module uses about 8.6 kilograms of silver per megawatt of panels. Megawatts is what solar modules are sold in, whereas a TOPCon module uses about 12 kilograms per megawatt. There are some other technologies coming forward like heterojunction, which use a lot more silver, but my feeling is you probably don't need to worry about those right now because they're not gaining market share very quickly. All of these things together means that the demand for silver for solar rose from about 200 million troy ounces. Sorry, I'm not used to working in troy ounces. So about 200 million troy ounces in 2023 to at least 207 million in 2024, and that's assuming that there's basically no increase in the inventory of the solar industry, which I think is somewhat unlikely. So yeah, solar's growing, and it's also just made a shift to using more silver. Over time, we do expect manufacturers of TOPCon modules to also find ways to tweak the recipe to use less silver per watt. But in the meantime, they're still using a lot of silver, and silver is still only about 10% of the cost of making a module. So it's unlikely that a rise in the cost of silver will stop the solar industry from growing. And that's all I have.
Great, Jenny, thank you. And if you've just joined us, then that was Jenny Chase, 20-year solar analyst at Bloomberg New Energy Finance, best known solar analyst that I've been following over that time. Next up, we're going to introduce Elvis Chu. Elvis works out of Taiwan for the metals as a consultant to Metals Focus. Metals Focus are the advisors to the Silver Institute. Elvis, thanks for joining us and your comments on solar.
Thanks, Simon. And hi, everyone. Good afternoon. I'm Elvis, working as a consultant in Metals Focus and leading to the precious metal research in Southeast Asia, as well as the global industry demand. And it's my pleasure to speak in this webinar. And so I will start my share about the solar industry and silver. Okay, first, as Jenny said, that the solar industry has developed robust in the past decade, especially after 2022. 2020, we saw due to the cost is much more affordable, so the installation capacity has increased rapidly. And this is, I think this is also the major driver of industry silver demand. Therefore, we saw that the silver demand in photovoltaic rising significantly, which account for more than 30% of overall industry demand in 2023, and is likely to exceed 35% this year. So such rapid growth can be attributed to the success of market diversification. As per our statistics, you can see the chart. In 2010, only 2 countries in the world has installed more than 1 gigawatt, but by 2019, we saw there were 16 countries in the world with annual installation exceeding 1 gigawatt. And last year, the number increased to 32 countries. And this year, it seems to have a further increase to 38 countries. So we believe that the global zero carbon emission trends also expect to continue and provide the impetus for the growth of a photovoltaic industry. Okay, so in the wave of this industry expansion, I believe China played an important role. The China rapid growth developed over the past few years has allowed this country to dominate the solar supply chain, not only in the solar panel module production, but also replace Japan to be the world leading country in solar silver powder supply. We can see that the chart, China's silver powder manufacturing technology has made significant breakthrough, which has led to a notable increase in their powder self-sufficiency rate from around 30% in 2021 to more than 70% last year. So in the past few years, we have seen that the global photovoltaic installation have always exceeded expectations. And the main driving force came from China. Then we knew that China's solar panel production account for more than 85% of global capacity and continue to invest in new production line actively. So the sharp drop in price of solar module due to oversupply and coupled with the strong market promotion has resulted in the far existing installation target planned by government. So therefore, we have seen that China's installation share jumped to nearly half of the global installation last year. This is like 48% last year, and we estimate that it's around like 43% this year. But just like Jenny said, that this is like a transition to the new technology, but it's also worth noting that under the pressure of hiking silver price, we cannot ignore the progress of manufacturing in thrifting and substitution. And these reduction actions have caused the silver loading per watt to drop significantly. So in the cost structure of a solar panel, silver pads account for around 40% of a cost, excluding silicon substrate. And the 95% of a past cost is attributed to the silver powder. So this is why manufacturers are constantly working to reduce silver pad usage. And this year, we continue to see a number of improvements that have reduced the amount of silver or increased efficiency. For example, the industry have introduced a LECO, we call laser enhanced contact optimization, to replace the laser doping selective emitter as an industry standard. Then also, we see that widely use of a silver coated copper powder in heterojunction, the HJT, and which overall silver content is as low as 30% now. And right now, we also see that zero busbar is projected to increase their share in Q4 this year. All these measures will reduce the silver usage or improve the efficiency. Let's say the silver loading per watt will continue to drop this year. Okay, so P-type battery. Actually, we saw that the P-type battery solar cell were the mainstream in 2023, but the proportion of an N-type battery has grown rapidly since Q4 last year, and right now become the dominant this year. With around the share, we expect the 70% share by end of this year. Since the N-type solar cell have a higher silver loading than P-type, so increased N-type shipment may slow the decline of silver loading in short term. However, as mentioned in the previous slide, the industry aggressive reduction action is beyond expectation. Therefore, we believe that the downward trend of silver loading per watt will continue, and the increase in silver demand will be much lower than the increase in installation capacity. Okay, this is pretty much my sharing.
Oh, thank you, Elvis. Thank you very much. I'm now going to invite Dan Woodbridge to give us his comments as an investor. In fact, the genesis of this webinar was Dan and I talking with each other about how silver was so important as an energy transition metal. Dan is a generalist, a portfolio manager at the Westbeck Energy Volta Transition Fund, runs about $800 million. Daniel, thanks for joining, and let me just share some slides for you.
Thanks, Simon. I think in a way, I'm going to take you on the journey I've been on to get airtime and be able to ask questions of the likes of Philip, Elvis, and Jenny. And you can see where an energy transition or a generalist interested in silver gets to the end of the road in terms of having to understand some of the technological changes that may happen in solar to have a strong view on the direction of solar and silver. So to begin with, I think there's few people who would say that gold and silver are not well coupled and well correlated. And at the moment, most people, if you ask them, would say the driver of the gold and consequently the silver price is fairly macro driven and fairly top down. And I think the biggest driver of that has been Asian central bank buying, where they increase their purchases every single month for 2023, and for the first half of 2024, they're a record high, specifically for gold. The historical relationship between gold and as a consequence silver due to the correlation and therefore real rates in the US has broken down over the last 18 months. Gold, silver would historically struggle to perform when US treasuries offered real returns, as they're a non-yielding asset. However, due to the strength of Asia's central bank buying, the gold correlation with China rates is far clearer to see. That's the chart on the right. Asian central bank buying has in effect trumped the historic US real rate correlation. Why is that? I think most of us know the reasons. We've seen a de-dollarizing of Asian central banks as we've had a bifurcation of I guess, relations and supply chains and politics to a certain extent between the East and West, and a growing skepticism or reticence of each other, and also a growing demand by China to be seen as reserve currency and dominating their nexus in the East. As Asian bank gold reserves have risen, you've seen their treasury holdings decline to fund part of this diversification. Asian retail buying of silver out of India and jewelry demand has always been a strong effect. And in recent years, last 6-12 months, I think Philip may agree or disagree, you've seen a little bit of an increase in Asian retail buying of silver, but a significant increase in purchases of gold as a store of wealth. And to a certain extent, it's the Chinese Tina. There is no alternative. Their property market has been poor and their equity market has been poor. So diversifying to gold has been attractive. So if I take that as the background to gold, we go to the next slide, and we see extremely high correlations in R-squared between gold and silver. So the highlighted middle column of correlations shows that silver's correlation to itself is, of course, 1. Its correlation to gold is almost 0.8, and its correlation to the equities is also north of 0.7. And for reference, you can see an industrial metal like copper, also key to the energy transition, is not that correlated with a correlation below 0.5, which is not that surprising. People might say, what about the gold-silver ratio? And it is reasonably volatile, but it's much more stable than it was in the 1900s. It's averaged 68 since the 1990s rather. It's 83 today. And although gold is clearly in an upward skew, partly because it's Asian central bank buying versus silver, the relationship at 0.8 still seems strong enough that where gold goes, silver still goes along for the ride from a top-down perspective. If we go to the third slide, however, we get a bit more of a bottom-up perspective, courtesy of the Silver Institute and the work of Philip and his team at Metals Focus, who produced this supply-demand model. As a generalist digging into silver, this is one of the obvious places to start. And I look at the model and I see that photovoltaic demand, as outlined by Jenny and Elvis, in silver terms, so bringing solar relative to the solar into the silver debate, it's more than tripled, from 8% of silver supply in 2019 to about 23% of silver supply today, 232 million ounces, and forecasts continue to rise. And I sit there, and if I could do a word count or an article count on the number of times I see copper and the energy transition linked versus silver and then energy transition, I think I could call that the sort of copper-silver energy transition word count ratio. I think it'd be north of 68 times. There's a significant premium in some of the PEs of copper stocks in anticipation of a tight market, yet to be achieved this year. And yet with silver, there's, of course, a strong interest in it as an energy transition metal, but not commensurate with the demand. The total energy transition demand for copper, if you take the grid plus EVs plus the use in solar, is indeed north of 20%. It's debatable if it's north of 30%. So it's comparable to silver, and yet silver is not in the debate as much. And then as I go through my journey, I read about the potential emergence of new technologies. And this is where I start to need to have more input from specialists. There is this talk of this transition from PERC to TOPCon and potentially silicon heterogeneous junction cells that Jenny and Elvis both alluded to. And I see some reports that tell me it might just use 50% more grams per watt, as per, I think it was Jenny's slide. I see some that tell me it might be 100%. I have varying estimates of thrift. And to put that in context, the amount of silver per watt used in PERC has come down 70% over the last couple of decades. So there will for sure be efficiency improvements. And then I notice on Jenny's side, the cadmium telluride thin film cells of First Solar are using 0% silver. And you have other perovskite technologies that Elvis referenced, which use some gold, could use some silver as I understand it. And you start to ask the question, does one need to understand the technological transition going on in solar, not just the absolute levels of demand, to understand the impact the solar industry could have on silver? And it leaves me with various questions about which technologies might win, at which speed, to what extent they might cannibalize themselves, because obviously we're shifting to these new technologies because they are more efficient. They capture more of the light spectrum. They'll therefore have a greater output. So as a consequence, will you need a lower level of installed kilowatts relative to their improved efficiency? And then the negative feedback loops that Jenny referenced, it's quite hard to get statistics on installations versus utilizations. In a previous life, I was a utilities analyst. If you actually start to increase the utilization of your installed base, will you be able to slow the absolute installations? And that might involve turning them from intermittent energy to a more reliable source, either through the installation of batteries, where battery installation costs are an all-time low, for better use of smart grids, for encouraging consumer behavior. I know with my own solar panels at home and my own Octopus tariff, overnight tariff, that my consumer behavior changed radically in less than a year. Probably 40–50% of my household electricity demands now do occur between midnight and 5 a.m. And the latest generation of white goods made it quite easy to facilitate that behavioral change, much easier than I'd imagined. And I'm quite the technophobe. So it was really good to hear from Jenny and Elvis. And I look forward to maybe digging into some of those questions. And then a final slide is, of course, the change in voltaic demand is not the only issue. There is still the change in retail demand and the wider industrial cycle. The wider industrial cycle, looking at manufacturing PMIs and ISMs, is obviously going for a little bit of a weak period, has been for several quarters. Whether stimulus or just natural demand pulls us out of that, I think is an imponderable that doesn't matter to the long-term story of silver. It might matter to short-term positioning and trading. But what I would say is that silver is possibly more leveraged to flows just by dint of being a smaller universe. So if I take the silver ETF as a proxy, it has approximately 30 names and a $90 billion market cap. If I take the two most well-known gold ETFs, the GDX and the GDXJ, it has in excess of 140 names and over 6 times the market cap, $465 billion. Another source of, i.e. more people buy the silver ETF, more creations, more demand from the silver ETF to go out and buy the shares in a less liquid universe could drive an asymmetric return in both directions, by the way, both positive and negative. Similarly, if I look at silver as a store of value, currently there seems limited interest from Asian retail demand, although there was a brief hiatus in central bank buying, which was reignited with some new quotas in August that might have led to some substitution, might not have. But just to throw a statistic out there, I'm not saying it's a trend that's about to happen, but to give you a feel for how tight silver flows are in terms of size of the market versus gold. If silver was to be bought at 5% of the rate of the monthly China purchases, non-monetary China purchases, so retail purchases of gold through January and May, that would equate to 60% of total silver supply. So between January and May, non-monetary purchase of gold in China were $11 billion. If I was to translate that into silver ounces, that's roughly, I see my own slides got that the wrong way around, sorry. At 10%, that would be roughly 450 million ounces. That would be 60% of this year's supply. If I take January and May as peak Asian non-monetary buying, and I go to a more normalized June and July at $4 billion, that is still equivalent to 20% of silver supply. So that's just a what if. I know it's not in the cards, it's not necessarily happening, but what if Chinese decide to buy silver? And then finally, when I come to stocks, I don't think that the point of the webinar is to focus on the solar, so I'm not going to spend too long on the stocks. Courtesy of BMO evaluation table, the stocks, probably not including the very latest spot price, they're on 1.7 times MPV. They've always been cheaper than the gold stocks. They both have fairly short mine lives. Very few of them overall are ROIC WACC positive through the cycle. So to a certain extent, timing is everything, and they don't offer a yield support. However, on a free cash flow basis at today's prices, both the gold and the silver stocks are looking quite attractive, and that was to carry on for a couple of years. We'd be able to get into a buyback cycle, a de-equitization, possibly a dividend cycle, and no doubt we'd start to see M&A, which we already have, and no doubt we'd start to see a reignited interest in the mid and the small caps, which we already have. And Simon, you had a couple of excellent names presenting at the Arlington Rapello conference on Sunday and Monday of the week just been, which I was lucky enough to attend. So thank you for that. Yeah, so in a way, I come with more questions than answers, but I wanted to frame how a generalist silver investor might be thinking and might be asking some of these questions, and they're questions which have answers from solar specialists, and they're questions which have answers from silver specialists. And Simon, you've been kind enough to invite both to this call, so thank you.
Okay, lovely. Well, I think that was really interesting what you were saying. There were so many points there to unpack. I'm not quite sure where to begin. I think one of the things that Simon wanted me to do was just to perhaps touch on other areas of the silver market, maybe things we should be looking at, and then maybe just take a big step back. And what does that mean for the overall picture in terms of the global supply demand and the deficit or surplus as we have in the marketplace? So I am going to focus very much on the demand side. I am going to very briefly tread on Elvis's and Jenny's toes, so please forgive me for doing that. I think one of the really interesting things, and this is not just for the solar, but it's other parts of the industrial market, it's the way the supply chain looks at the silver price. And although I've been in this market doing this for quite some time, frankly, I've had to readjust how I look at it as well. I always thought that, well, the silver price is a modest share of the overall total, and therefore that means there's not going to be pressure, or manufacturers or using silver aren't going to feel pressure when they're making, say, a silver bearing component. But I realized that that's not really the case. Jenny mentioned that I think silver accounts for about 10-12% of silver accounts for about 10-12% of the panel. But I think as you get, silver prices have picked up even very recently. I think there's certainly more pressure on manufacturers because even though the price until recently was quite modest, a lot of the supply chain, they remember when silver was $50 or $40. They know that the silver price can be pretty volatile, and so you've always got that pressure from a technological standpoint to contain or reduce the role that silver plays, or how exposed you are to the silver price. Now, you may think that's a bearish way to look at it, but as we can see from the figures that you put up in your slides, Dan, we're looking at, for this year, a record level of global silver industrial demand, over 700 million ounces basis, our latest figures. And that's a figure even allowing for the thrifting and the substitution that we see go on. So I think that's really a positive sign. It gives you a sense of just the diverse number of end uses that are out there. I think moving away from the solar market, but in the concept of this webinar in terms of new energy and green uses, the fact that you have, in terms of the electric car, which uses more silver than, say, an ICE car, internal combustion, or a hybrid. So that's one positive. But even though we're seeing slower BEV sales, the fact that silver is still used in a fairly large way in ICE vehicles is an overall positive in itself. So I think overall, taking a step back from an industrial standpoint, it's just a very positive outlook that we have, even allowing for the substitution and thrifting, which is ongoing. And just, I guess, to finish in terms of the BEV vehicles, again, I've looked at this in the wrong way. Even if there's, say, 2 ounces of silver in a car, $60 versus the value of a car, well, on one level, who cares? But we had to think about that in the context of a manufacturer of a silver-bearing component that's passing that along the supply chain. And at their level, silver is a much higher, counts much more of their intermediate product. And so when silver prices are rising, there is pressure on those manufacturers to realize, to increase or to reduce, rather, the amount of silver they are using. So anyway, that's my finish stepping on Elvis and Jenny's toes. So hopefully I didn't transgress too much. But there are other areas of the market which are really quite fascinating as well. In the coin and bar space, Dan spoke a lot about the investment part of the market, but that's been really fascinating as well. And we've had different markets operating at different speeds. So we've had significant weakness in the likes of the US and Germany. We've had buying slow down quite dramatically in those locations, but India has been performing relatively well. And so that's given you a degree of stability overall over the past year or so. Even though it's down on what it was a record high a few years ago, if we're thinking the past couple of years, the market seems to have stabilized. So that's an interesting one to watch. I think the other really interesting area is on the jewelry side of the market, and especially India. Now, I guess India is not only, I think, the largest jewelry fabricator in the world, it's the largest fabricator of silverware. It's the largest silver retail bar market in the world, given the weakness in the US. And it's about the 5th largest silver industrialist as well. So what happens in India really does matter. And it's really fascinating to see how the market is responding to these high prices. So demand has certainly backed off, as you would expect. Having said that, it's not all so simple, because a few months ago in July, the Indian government unexpectedly reduced the import duty on silver and gold and PGMs as well. And that gave a bit of a shot in the arm to these markets. So, you've had that shot in the arm, but now you've got prices picking up. So different dynamics are playing out in the Indian market. So it's certainly a really fascinating one to watch. And then what that all means when we try to unpick all of that is that overall, and it's led by the industrial sector, you've had a stronger performance of demand versus supply since the market's been in deficit. Not only has it been in deficit, but the deficits have been really eye-watering. And we think that, even if we don't get back to the record high deficit we've had a couple of years ago, the deficit will still be meaningful. And that, from our point of view, will be a really important dynamic when we're thinking about, what the silver price may or may not do in the coming years. So I hope that helps, Simon. But do feel free to jump in if there's anything unclear, please.
Thank you, and thank you for getting through that. My laptop decided to die just as we were getting to you there, Philip, so thank you for picking that up. We've got 2 more laptops to buy today, I think, Dan. Dan, as an investor, have you heard the answers to the future of the solar industry and the implications for silver demand that you thought you would hear today, or have you heard some surprises?
No, I think we've started, because Jenny and Alice's brief was to lay out an introduction, which they did well. And if I was to sort of peel back the next layer of the onion, it would be to start with Jenny, actually, where First Solar is obviously one of the largest solar companies in the world, and has managed to maintain the average selling price and has been one of the few successful equity stories remaining in the solar ETF over the last few years, which is an ETF and a sector where the share prices are down 70–80% as margins have been crushed. And they are using thin film cadmium telluride, which uses no silver. So to what extent, Elvis or Jenny, would a technology like that, obviously this is First Solar's patented technology, could that come in and that become ubiquitous technology?
No, absolutely not. First Solar is a manufacturing company with a lot of lawyers. The reason First Solar appears to be doing so well is that it has been on the fortunate side of every trade dispute. So now it's basically just selling to the US. The US is a weird market. It is a weird solar market. It is small, considering how many people it's got and how much energy it uses. And it just... And prices for modules are very high because there's this incredibly complicated system of trade tariffs to get through. And basically First Solar benefits from that. And now it's benefiting from the investment from the US IRA, which is basically going to pay it 17 US cents per watt to make solar modules using its technology in the US. Given that the price of normal solar modules right now is 9.5 cents outside the US, that is a lot of money. But First Solar is not going to grow to take over the world. It can't. It's not competitive outside the US. And nobody else has cadmium telluride technology that works. Cadmium telluride technology is basically it's had a good run. Diversification is probably good for the solar industry, but it's less efficient and more expensive than crystalline silicon.
And I mean, that's a point well made. And the equity market tends to look at first solar, both with and without their IRA credits when they attempt to value them. And most of the consensus models ascribe anywhere up to a half or more of the valuation to the IRA credits. If we're going to a more a less tariffed part of the world, so outside the US, how about some of the other technologies that use silver less, some of the thin film or perovskite technologies?
Not
Is there
a
a
thing.
chance that they take over?
No.
And why? And Elvis nodding his head, and maybe to give you both a voice. Why would that be, Elvis and Jenny? If you add to his answer, perhaps.
Yes, I fully agree with Jenny's comment. If you look at the key to promote the solar, one of the key is about cost structure. I have to say that the silicon-based solar has dominated the market. One of the reasons is the super low cost of the whole supply chain, including the substrate, the module, the everything. So this is cannot compete by other technology in short term. So when we see the roadmap from all the key or leading manufacturers, there's no other but silicon basis. So I will agree with Jen's comment. This is at least in short term, we don't see other alternatives, and then of course this silicon-based solar cell will continue to dominate the market.
Right.
And then I guess my question is, if there's not substitution from technology, at what speed will the technology that uses more silver, the TOPCon that you referenced, what would you expect that market share to become, and how quickly? And could you give us a feel as to why that technology is going to succeed? Is it cheaper? Is it a better technology or a better life? How's the adoption cycle going to take place?
The several key factors. You can see that there's one important chart that Jenny showed. It's about the efficiency. In the past decade, actually, the efficiency increased almost like 70 to 80%. This is really helped to reduce the cost per watt. Then the second is about because of the technology improvement, the silver loadings on the panel drops significantly in the past decade. Especially in these 2 years, that, as I said, there's several new technology, as I said, LiCo or some like a zero bus bar, super multi-bus bar to zero bus bar or something else. They reduce the silver usage. So this, the drop is more than your expectation actually. Then right now, I won't say that based on if you look at the manufacturing roadmap, they reduce the silver by quarterly basis. So every quarter they have the target. So the silver loading, when you see maybe early next year, you will surprise how low it will be.
Okay,
so this is
just to repeat back what I think you just said. In Jenny's chart, I think you showed, Jenny, that the silver milligrams per watt were going up from 8.6 to 12.
With the move from PERC to TOPCon. I have to say, Elvis, I've never heard of this term loadings before. What does it mean?
Okay. The means that because what we do is for Maker's Focus, we don't. I would believe that the silver demand is not just a simple mathematics. So we have to do some field research to talk with the manufacturer, talk with the powder or pass makers. So that's why we have to know the roadmap or the reduction path for the leading manufacturer. So this is really key because every year when you look at January and December about the silver loading in January or
what is the silver loading? Sorry, what's the definition of that term?
It's silver loading per watt.
Oh, so it's the amount per watt. So you didn't see,
Yeah.
I mean, on your silver loading chart, you didn't see an uptick of silver loading with the move from PERC to TOPCon.
We will not show that because it's really dynamic. I have to say that it's as I say, it changes by quarterly. So we will have a final answer, but we will not show that. It's so dynamic.
I think just to add to what Elvis has said there, the short answer is no, because even though you've got the technology uses more silver, as we all know, the thrifting has offset that.
Okay, so
yeah, and that from my perspective is where I was interested in your model and speaks Jenny, because thrifting has worked over time and it has been quite dynamic, but it's never been instantaneous. And yet when we move from PERC to TopCon, there is a step up, which I would expect thrifting to maybe improve over time, but I wouldn't expect it to step down immediately. And obviously I don't know what the market share adoption is, but let's say we took a fictional scenario, which would never occur, which is you flipped from PERC to TopCon in a year, then the 232 million ounces, when we go from 8 to 12 grams, all else being equal, would be 350 million ounces. So there is going to be your silver loading rate is going to be in competition with the market share adoption rate of this higher silver consumption technology. And even if I knew both those rates, there is a third dynamic, as I see it, more just from a generalist common sense dynamic, which is if we're going to TopCon, because that adoption drives greater utilization of the cell, then you may need less cells.
No, that's not quite right.
Fine,
Well, so everything, all the numbers. So first of all, the flip in market share is from 73% PERC in 2023 to 33% in 2024. And TopCon, yeah, it's pretty quick. The solar industry has a really short turnover cycle. Horrible. Solar manufacturing is a horrible business, by the way. Don't get into it. But yeah, it also seemed, whereas TopCon has increased from about 22% in 2023 to about 59% this year. Those numbers could be a little bit off because they're estimates, but that's a big jump. And I would be slightly surprised if thrifting, while it's certainly true that there's a lot of pressure to reduce silver use, I'm slightly surprised that your calculations say that thrifting is reducing it that quickly. Also, the move to TopCon is because despite the fact that it uses less silver, it's now less expensive to manufacture per watt, and it's more efficient. Now, more efficient means it takes up less space per watt, which means that you can sell it for a slight premium because you can fit more panels on the roof, and the cost of installing a panel is roughly fixed. So if you have more watts per panel, the installation cost goes down. Those are essentially the big things. I mean, TopCon is just generally better. That's why it's had such a strong uptake.
But it's not like the silicon heterogeneous junctions as far as it's accessing or some of the thin film technologies using two junctions. It's not because it's accessing a broader spectrum of light and allowing you to get more hours of usage a day.
That's not what heterojunction does. Heterojunction is also higher efficiency. It's not more hours. It's that you capture, or if it is, that's a really tiny effect compared with just the fact that you increase the efficiency of a solar module by having two layers on top of each other, which capture more of a certain amount of light.
That's okay.
But yeah, TopCon, again, they're basically all different efficiencies. And efficiency is a measure of how much space it takes up per watt of capacity. Please don't ask me to define exactly why TopCon is more efficient than PERC. It's complicated.
And on the Shokler-Quasar basis, we're looking at how about doing it that way, in percentages of efficiency. Is that a way to express it in terms of relative to Shokler-Quasar limit? Is TopCon X% versus a PERC at X%? How would you express this efficiency so we can understand the relative merits of TopCon?
Just say TopCon, the average market, the average efficiency of a module on the market for TopCon in 2023 was about 22.3%, whereas for PERC it's about 21.3 at that time. So you've got about a percentage point more efficiency.
Okay, so not that dramatic. 1% over 22, 3-4% more efficient. And how much cheaper are they to manufacture taking a stereotypical unit?
Ooh, very, very slightly. But it doesn't, but if they're cheaper at all, that's a benefit, since theoretically TopCon should sell at a premium. It's not a big difference right now, but yeah, it's.
So out of interest then, if it's just marginal gains, how much of an increase in the silver price, assuming the silver loading doesn't go quite that fast, would erode those marginal gains? I mean,
that's a really good question. And I haven't done the maths offhand. It should. I mean, there should be an offset effect, and I think that's probably the reason why, for example, PERC is still the tech of choice in the US and India, where companies haven't built their shiny new TOPCon factories.
And from the outside,
but maybe Simon, maybe I can give you the index. If you look at the tier 1 panel or module manufacturer in China, the tier 1 companies, their gross margin is only single digit right now. If you look at their financial report, for the tier 2 or tier 3, almost like 80 or 90%, they are losing money right now. So they have a heavy pressure for cost reduction for all the material that to make the solar panel, so solar module.
But is that
So if
driving
you look at
a reverse force between TOPCon? Is that driving companies to move from TOPCon back to PERC or to utilize their PERC factories?
Actually, they already I have to tell you that in China, all the PERC company, they are losing money. Nobody make money right now. So they are forced to transfer to TOPCon. Otherwise, they will be bankrupt.
They're all going. I mean, loads
so
of them are going bankrupt anyway, including the TOPCon ones.
Yeah, they already closed. Like at least I know there's a 4 company they are making PERC. They closed. They shut down already this year.
So given
that's
Jenny, I think your statistic was that the price of silver at $30 or so an ounce today is about 10 or 11% of the price of a module. Did I get that right?
Yes, I need to work that out again, but yeah, it's approximately it's around 10%.
And even I think you also told me in a previous conversation, Jenny, that the price of getting a solar panel on your roof is actually 4 to 5 times more than the cost of the module, because you've got to transport it, you've got to put some scaffolding up, etc. So
yeah, the silver price is not going to change the solar uptake. The effect of $100 an ounce silver is not going to slow the energy transition to solar. What it will do is potentially drive some tech shuffling within the industry,
well, I mean,
but
it could drive a couple of things. So I'll take some crude maths. If the difference in price between a TOPCon and a PERC is just 4 or 5%, and the efficiency is 4 or 5%, and silver's 12% of the cost of the panel, if silver was to double in price, your efficiency gain plus your price gain in a TOPCon panel at that point would be offset by the increase in your silver price. To shortcut the maths you haven't had a chance to do, because obviously 11-12% doubles, it's now 24% the cost of the panel, and you'd switch to TOPCon because it was 4% more efficient and 5-6% cheaper. So that's just a sort of crude hack at it. The other thing I was curious about was some of the technology which might not be quite there yet, but I know there's quite a bit of work on substitution of doing these printed silver stacks where you have nickel, copper, and silver. And they're talking about that if you can reduce the laser contact openings to 5 nanometers, that this technology becomes viable. And in that scenario, if you used a stack with silver, I believe, at the top and much more thinly used, you could reduce silver consumption by up to 90%. But when I read some of the papers from research institutes, it's very unclear as to whether that is even working or whether it's years away, or in a fast-moving industry, just a couple of years away. Is this something either of you had a chance to dig into, some of the substitution technologies for silver?
I think if it's only in research papers, it's not coming anytime soon.
Yeah, well, a bit more research papers, I say, in a product with research justifying it.
Yeah, but if you look at the industry current status, that I think that let's look at the finger width. Last year, the majority finger width is around like 14 micron to 16 micron. But now look at the finger width. It's down to 12 micron, and in Q4, I think this is a 10 micron. And next year is 8 micron.
Yeah.
So this is so that's a use. Look at it when the conductive line becomes shrink. That means you use less silver. So right now, that's why I say the industry has a much more aggressive path for cost reduction than everyone expectation right now. So that's a very dynamic. They go quarter by quarter, every quarter change.
Yeah. Okay. So you think silver loading really could get there with the micron printing. And how about the I think one of the technologies which as recently as September was gaining, obviously they've been looking, people are always looking for silver for aluminium substitution, but specifically in TOPCon panels, there has been talk about using aluminium paste. Elvis, have you seen anything to suggest that's viable anytime soon?
Some company will use, but at the moment it won't be the majority, because when they use this aluminum paste, they lose the efficiency.
Yeah. And Elvis, that's simply because silver is the best conductor known to man.
Yeah.
Yeah. That you were getting some panels with aluminium paste north of 22%. And my other question is more of a top-down one on how these solar panels are used. Because to put it in context, last year I think it was roughly 215 gigawatts of solar installed. This year we're running at a 30% increase in China year on year for the first half. That would mean over 2 years China will have installed 500 gigawatts of solar. To put that in context, the entire power industry of Germany is around 250, 300 gigawatts. My understanding is quite a bit of this solar isn't necessarily installed. With battery prices right down and the cost of battery storage right down, is there a risk over the next few years that rather than installing more solar, China just tries to be smarter about how it's using the solar it has?
I mean, we think not, which is why our forecast is that installations continue to grow,
Right.
but more slowly.
And is there a risk there? Are there any? I'm sure there are from the CNEA, etc. Is utilization improving of the installations they have?
So no, curtailment is actually on the rise in China. Solar generated about 6% of China's electricity in 2023, and that it will be up to, it's about 8 or 9% this year. And that does mean that there are places now on the grid which on a sunny day the grid cannot get all the power out to the places that need it. And this is a negative feedback mechanism. It's a very local issue. And the way that Chinese provincial governments handle it is they stop building solar in that particular place. So the big question overall is whether there are more growing markets within China and in fact within the world than there are markets where these negative feedback mechanisms are kicking in.
And is there not a regional response to install storage instead? Because the
Yes,
battery prices are
absolutely.
quite depressed.
But at different rates. I mean, batteries are still quite expensive, let's be honest. And if you just install them for energy arbitrage, it's quite difficult to make the economics work. There are mandates to install batteries at most large power plants in China, most large renewable energy power plants in China at the moment. And that is being done. My suspicion is this is not enough to halt the negative feedback mechanisms on the industry.
And so, Jenny, did you just say that the growth in Chinese solar capacity would slow because of those negative feedback mechanisms?
Exactly. That's what this chart shows.
Right.
This chart is what my team spends like 25% of our lives on. But it's really hard to predict. I mean,
yeah,
I
that's
think
a tricky question. With all that time spent, what's the historic track record of those predictions? And that's there's no shame in not being able to forecast a complicated future.
Bad, but not as bad as everybody else.
Okay.
Yeah.
I mean, solar can really surprise you with how fast it gets rolled out. That's the thing.
Well, I think I read in The Economist solar piece a couple of months ago, and feel free anyone else to comment on it, that the IEA over the course of the last 20 years has been out by a factor of 250% with its predictions of solar capacity growth. It's been understated that growth by an average of 250% a year. Maybe I can invite each of our panelists to make some closing comments in a minute. But first, I've just got a question for you, Dan, from Lachlan Tierney, who asks, can you share your thoughts on smaller silver companies, particularly those outside of the 30 names you mentioned in the Global X ETF? That's a quick one for you, Dan.
Yeah, I'm not going to have a great answer. Like I said, Volta's an energy transition fund. Our own exposure is small, and a basket. I'll just make fairly generic comments that Lachlan would, I'm sure, know. I mean, typically the smaller companies can show higher beta, but I would argue that higher beta, you require that higher beta to offset the higher equity risk premium for holding a less liquid situation. I believe we've seen some quite dynamic share price movements even in the last few days. One of the attendees at your conference, Simon, was one of those small caps outside the basket. Mifril, I believe, were up 600% on a good discovery. So you might want to articulate that on that. Obviously, when you're searching for treasure, and gold and silver is probably the epitome of searching for treasure in stock markets. Individual names have high idiosyncratic alpha, and if you can find a way to track their progress and find research coverage, I'm sure you can have outsized uncorrelated returns. But we have yet, with the size of our fund, to be overly focused on that space.
Yeah, let me just give you a quick 30 seconds on that before I ask each of you to sum up your views. Lachlan, Daniel's referring to a company called Mithril Gold and Silver on the Australian Stock Exchange. It's gone up about 600% in the last 10 days on high volume. I think it traded 11 or 12 million shares today, and it's trading around 76 cents Australian. They've made what appears to be the highest grade gold silver discovery in the world year to date at their Mexican Copperquin gold silver project. 2 points on that. One, grade is king. You tend to make more money if you've got more valuable dirt. Secondly, and a comment that Philip Newman, you might have be part of your supply demand model that forms the basis of the Silver Institute predictions. There has been talk in the last presidential cycle in Mexico of an open pit mining ban, but actually what we heard from these two Mexican silver companies presenting at the Arlington Rapallo was that that's not going to happen. There's not going to be a shock in supply. Mexico produces about 200 million ounces, or 20% of the world's silver. That's not about to change, and in fact there's new discoveries being made there, albeit Mistral and Vizsla, which presented at our conference here over the weekend, are both underground mines, not affected by the talk of open pit bans. So Philip, as you're the Silver Institute author of the key demand supply inputs into their model, is there anything else that we've missed in this discussion that we should think about or know about before we ask Jenny and Elvis to give us their final comments about the importance of solar for silver demand? Philip, you first, please.
No, I think we've covered all of the main areas. I mean, obviously, silver briefly touched $32. I think the interesting thing will be to see how the various areas of demand really respond to that. But I think even allowing for that, and given that our forecast does have higher silver prices, ultimately the market remains not just in a deficit, but in a substantial deficit, and that's not about to change anytime soon.
Gotcha. Jenny, as arguably the most experienced solar analyst in the world, maybe you could give us your thoughts on where solar demand and silver loadings within those modules goes in the coming years.
The solar industry is not going away. It is going to be reducing the amount of silver it uses per watt, but at the same time, there's probably going to be at least a slow increase in the amount of solar installed, and there isn't anything coming down the pipeline that would absolutely disrupt that. So I think solar demand for silver is not going away, and it's likely to be flat or maybe slightly increasing for a few years.
Thank you. Elvis, what do you think?
Yeah, I agree with Jenny. I think we still have the outlook for solar still remain bright, as the installation capacity will remain high level in the next 3 years. So we believe even if the shifting or substitution will continue, but the silver demand in photovoltaic will still play the very important role, and will be the one single major most important application in industry.
And Dan, thank you for being my co-host, particularly when my laptop died. What did you hear today? Did you make you more or less bullish as an investor in silver and silver companies?
I think it reassured me that macro drivers aside that we looked at with Asian buying, that photovoltaic is a driver of silver demand. And I think it also made me realize actually that the TopCon perk substitution was very dynamic, and an industry that can be that dynamic in adopting new technologies can also possibly be that dynamic in adopting any advances in thrifting that come along. So probably for me, when I go away from this, the big picture is intact, and I would probably want to understand more about the silver loading and new technologies coming down the track, just so that I've kicked the tires properly and I can be aware of potential risks. And I guess at the margin, I still suspect that TopCon perk could see a step up in overall silver use. And I think it sounds like I'm going to have to look quarter by quarter to see how the silver loading offsets it. So I hope I'll be able to stay in touch with Jenny and Elvis on that dynamic, which sounds quite key.
Very good. Well, I'd just like to thank each of our panelists. I want to thank Metals Focus for both Philip and Albert time. And if you want to really understand what goes into supply demand for the Silver Institute, then feel free to contact either myself or the Metals Focus guys, Philip and Albert, directly. Jenny, thank you for your wisdom. It's reassuring and ubiquitous. Dan, thanks again for being co-host, and thank you from Arlington for everybody joining today.
Thank you, everyone. Have a good day.
Thanks, everyone.
Cheers, guys.